Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, the 29th of September, 2021, and I'm back. I'm back on camera. We got everything fixed in our studio. It's the way you go, and it is a studio. This isn't a basement somewhere. It's a true studio that's got all the right equipment in it, and I tripped over one of the wires. The wire was connected to the camera. The camera was connected to the tripod. The tripod was, you get the story, and I created a nightmare. It's all fixed now, thanks to Amazon. I want to thank Amazon a lot, by the way, because without Amazon's help, they were able to deliver things. If I ordered it at 2 in the afternoon, I'd have it the next morning between 4 and 7 in the morning. I'll pay for that service left and right. They got me the products. I ordered the wrong product one day, but so what? All right, here's the event of tomorrow that's going to happen. If a bill is allowed to be voted on the floor for the budget, it means it's going to pass. If you bet against Miss Pelosi, I wouldn't. Does that mean it's 100%? No, nothing's 100%. Anything can happen, but as she said, not I said, if she brings a bill to pass to the floor, she has the votes in her pocket to get it passed. I'm not sure that she's got the debt ceiling part of it wrapped up. So we'll see what happens. The key is not to shut the government down tomorrow night at 12:01. If that happens, there's hell to pay, and that's why the president didn't come to Chicago, and that's why I was lucky my family member who had come on the advance team was here. And I loved it. Normally I wouldn't see him because he'd be with the president, and that he's assigned to the president by the armed forces, and that's what he does, so it was great. But to make a long story short, what do we do if this thing doesn't pass? You're looking at a big problem. So you've got to tread water tomorrow. Are any markets really in uptrends? We're going to cover that. The answer is no. You might get some bounces, but this is what you've been facing. There's a hole in this chart here. I wouldn't be surprised the market wants to fill the gap there. There might even be one back here. I didn't even look, but you often fill gaps. So eventually I'll look for it to be filled. But this is a market that's recently gone from 305 down to 284. I remember owning this stock at $25, so wow. When you look at the swing lines, they're clear out bearish. A bear pattern is lower highs, lower lows. So the apexes are there. Now there's 5 steps to the swing line. I teach them in my charting course. You can replicate them on your charting software, or better yet, use ours. No big secret to it. But the key is that you're always looking to see what is the pattern. Is one there? And then you start filtering the pattern with moving averages. And when you're under the 18-day moving average of closes, I call that average the line in the sand. I don't care if it's on a weekly chart or a daily chart. It's the line in the sand. Why? When you're under it, it's a bias. Being under it means you have downside bias. When you're over it, it's upside bias, and you're always filtering the swing line. Got it? Trend down, bias down. One potential target is the 100-day moving average, and often you will hear on financial TV all over the place. The first challenge, let me make the word recent challenge of a 100-day average is often where support is uncovered. The second recent challenge, back-to-back, no, it's not the same thing. So the first one, I'd look for that 277.37 to be the support. Now, will the market get there? Hard to know. Why? You're already a couple of days under the lower Bollinger Band. You only spend 5% of the time under this algorithm. Now, that doesn't mean the algorithm number doesn't keep dropping and you can't just go sideways to get back inside of it. Normally, you get more of one of these. You make a run towards it, and then you get the turnaways from it, from these top sides. So understand the nature of the beast, as I call it. It's the best beast I know. It's a wonderful beast. And you're then trading on the right-hand side of it if the market can do so. That does not mean you're not going to that 100-day average. You are oversold, though. Slow stochastics, the way that traditionally people work with it. And how do I know? I worked with George Lane, who developed it, and knew him for many, many years. I love the guy. He used to wear, like from New Mexico, all that jewelry, and he was quite a colorful man. And when he developed this, what I loved is I found personalities inside of this, when they embed, when they don't. So the typical thing is you're going to move between 20 and 80, getting oversold, overbought, back and forth. If you get both numbers, the red and the blue, going sideways under 20, it locks in. It's embedded. You haven't done that. So you have an oversold market, 2 days under the lower Bollinger Band. Typically, by the fifth day, you move to the right-hand side. And I said typically. You normally don't stay more than a couple of days under the band. So that's the key there. In Apple, as I told you, still in a downtrend, oversold condition. A lot of support between the lower Bollinger Band at 139.52 and the 100-day average. And again, I think the pros will buy that 139.52. I think they'll look into the abyss and do that. I don't know what tomorrow's going to do because of this vote that is coming up. ARK. As you know, Miss Woods is just taking a beating this year. She's been a stellar performer for a long time, but her fund is taking it on the chin this year. She was invested heavily in China, not the place to be, and I can go on and on. I'm not criticizing it in any manner. I'm just calling it the way it is. This is still in a downtrend, very oversold, and you're liable to get a bearish crossover where you're getting the 18-day average under the 100. That could happen as early as probably Friday. In XLI, this was a contra-trend rally off the 200-day average that kicked it. Now, here's one of those cases where I'm saying you don't buy the secondary close test of a 100-day average. You didn't hit it here. You hit the 100 here, you bounced away, then you hit it here. I was not keen on that buy. Why? Even though you're up here, you're losing momentum. By the third one, you got yourself in trouble. Understand how the pros look at these, and it gives you an idea. Sometimes what you think is support is really a sign the market is showing you more weakness. And that's what this actually did. Now let's see. CNBC. Okay, I want to get high with it. But all you had is a bear market rally, a bear market rally into the 18-day average, slipping back. You're not trending. You're out of that hell where you just kept going down, but you haven't established an up or a downtrend. In XHB, I saw today's National Association of Realtor numbers. They were actually pretty good. Now, what has to happen is we need more inventory. We need interest rates not going up dramatically. They can go up, but not dramatically. And the demand to stay here because there's more product and maybe a slowdown in prices to make this all look better. But there's nothing bullish here. You can end a bear trend, but you can't start a bull trend on this particular pattern. Then we get to the energy sector. Need I tell you that every news analyst, it's energy. Now, I'm not talking CBS and NBC. I'm talking the financial TV shows. And up and away, they get their analyst on, will we see $90? Yeah, you're going to see 90, and then you're going to see the 100. You'll hear it. But it's the sucker play to buy over an upper Bollinger Band. That doesn't mean you're not going higher later on. But you do realize if you buy at 53.83 and you go down to 52.89, it's not so bad on XLE. If you do it in the futures market, you get wiped out. On the emerging markets, high energy prices, let me just think that. High interest rates, let me think that. Supply chain issues, let me think about that. And you want to be bullish emerging markets in that? I don't have to think about that. That's the part that's been going on. You are oversold. I don't know that you're going to the Bollinger Band again. We have to wait and see. But there's nothing bullish on the chart other than it's oversold. Gold. Could it be worse for an inflation hedge? Isn't everyone saying inflation is running away to the upside and big time, longer, it's not so transitory, and gold's making new lows on the move? So it's just not gold's time. And when it's not gold's time, you prepare and you fight. You don't fight it. You go with the bearishness, and that's still where you're at in this market. Same with the gold miners. If the gold's no good, how could you think the miners are any good? TLT. Now, these are the interesting part. Here's your combination of the 200-day average right here in gray, the 100-day average, and the lower Bollinger Band. This is the support zone. If this gives ground, you got to be careful. You're oversold. It favors the market's going to hold this area. I am not bullish. It favors in a bear market, you're seeing short covering. Last in the euro, I want to go to Europe and get some good cappuccinos, okay? Look at the price that's going down. I just had a friend, I haven't talked to him, one of my closest friends. And I know he got back from, they did a barge trip in France. And I haven't talked to him in the 48 hours he's home because he's probably worn out, but I'll bet he had the ball. And I know they went to France. They like art and so on, so they probably saw the Christo over the monuments there. It had to be a phenomenal time, but pricing had to be phenomenal. And that's the part you look at. Because when you go to these countries, when you go to Europe, you eat, you drink, you have a good time. You can buy clothing anywhere. That's what I've always found the best things to do. Of course, you got to wear the masks and the COVID restrictions. And I'm questioning, why haven't we seen somebody come up with a great app for the COVID restrictions? Would somebody tell me why we haven't had that yet? Why can't somebody develop that where we get to the point where you're able to walk around on your phone from a government agency and it's there? Now, maybe it's in Europe. It's not in America. I would be in it. I'm sure you'd be in it if you had the vaccine shots. It's not there. You got to carry a card with you in plastic and you lose it, and what do? It's all nonsense. But what isn't nonsense is what we put together. Now, you're going to say, Ira, what do you tell me about the Board of Trade? Let me explain this. You're trading spiders, IWM. You're trading DIA, SPY, TLT, the energy markets, the USO. You think they're not coming from the commodity base? Why not learn that? I'm not telling you to trade commodities. Our research is what you want to see because that's what you're trading. Not my research, but the analysis of these different markets that you're in. So take the time. It's a free subscription. Go to our website on the bottom right at www.iraepstein.com. Take a look at it. You can always be taken off of it. No credit card involved. I'm Ira. Can't wait for tomorrow's vote in the House. I will see you tomorrow.